What value investing says is that although there are prices which are traded in the market, there is some intrinsic worth of every security which is called its value, which may be different from the price at which it is trading. So value investing really is trying to buy securities which are traded at a price lower in the market as compared to what the intrinsic worth is. The way we implement value investing is that we first of all analyze the intrinsic worth of every company, and then we look at it from a long-term perspective. We are not just looking at current earnings or current assets, we are looking at long-term earnings and long-term assets. And then we buy securities which are available at the maximum discount to this intrinsic value over a period of time. So by definition, value investing, number one, has to be long-term. It has to be bottom up. It is actually at every single security level. You have to look at every company, and one needs to be patient, because when you invest based on value, you really have to give the investment a chance to perform, and therefore one needs to be patient. Just going back into history, Templeton India Growth Fund was launched in 1996 using the same value investment principles which Templeton uses globally. However, it was restricted just to the Indian market because it was a local fund meant for local investors. The process is the same. It is finding the best bargains over the long period of time and sticking with those stocks. So the objective is to make absolute returns for the unit holders irrespective of what is happening in the market, and that's the way we evaluate securities. If you look at the portfolio itself, the portfolio construction, that comprises roughly 25 to 35 stocks at all periods of time, and this has happened over the last 16 years. If you look at it, it's been between 25 and 35 stocks which we've been holding, and we are fairly indifferent to how these are weighted in the index. We look at it from a bottom-up perspective and we try to buy the best value. We believe that if a person commits himself to making absolute returns over a long period of time, there is a good chance that he will end up outperforming indices. So our endeavor is really to make absolute return, and in doing so, we may actually end up outperforming indices. But outperforming indices is not an objective by itself. The fund itself is targeted towards all investors who have a long-term view on the stock markets. There is no near-term free lunches available in the stock market, and I think over a period of time most people will realize that it really pays to be invested over the long term, and the returns can come most unexpectedly at times when people are most disappointed with the market. As we've seen recently, we've had a big rally in the markets at a time when most people were talking that there is a lot of gloom. So essentially one needs to be fully invested. From our point of view, we are invested in securities which sometimes are not doing so well in the market, and we take this conscious call that bad times will give way to good times and good times could return, and therefore to get the best returns from these investments, one needs to actually wade through the cycle, and therefore we always say that people should have a 5-year view when coming into our funds, simply because we at some points in time may be buying out of favor stocks which are available at deep discounts in terms of the bargains as compared to the market, and then we hope that when the earnings do return, the stock prices will eventually reflect the fundamental value which we ascribe to these companies. So the fund itself has done reasonably well over a long period of time, and we've seen that it goes through phases when it actually does quite well against the indices, and there are periods when it doesn't do so well. And I think the big thing for investors to realize is that this fund is based on a bottom-up strategy. It is looking at value unlocking, and if investors are willing to wait for the long term, there are rewards to be had in this fund, and which we've demonstrated over a period of time. We don't have to speculate in the market, we don't have to churn in the market. Our portfolio turnovers are amongst the lowest as compared to the peer group, and yet we've achieved absolute returns. So there is a big myth that to be successful in the market, one needs to actually trade. But essentially, if you look at it over a long period of time, if you are just a holder of good value stocks, you tend to do pretty okay.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.